The UAE's non-oil private sector lost some growth momentum in April, with business conditions improving at the weakest pace in 3 months, according to the latest PMI data. The UAE Purchasing Managers Index posted 52.8 in April, down from March's four-month high of 54.5. Although still consistent with a solid improvement in business conditions, the latest reading was only just above the near 4-year low seen in January. It was also below the Q1 average of 53.4, which was the weakest since the opening quarter of 2012. Output, new orders and input stocks all rose more slowly, but the main drag on the sector was the stagnation in employment, according to the report's findings. It was only the second time that payroll numbers had failed to rise in the survey's history. Meanwhile, cost pressures remained subdued and charges continued to fall, with greater competition again cited as the main driver of low tariffs. The survey, which is sponsored by Emirates NBD and produced by Markets, contains original data collected from a monthly survey of business conditions in the UAE's non-oil private sector. Abu Dhabi Ports reported double-digit growth in 2 major cargo sectors during the first quarter as business activities picked up at Khalifa Industrial Zone. Roll-on, roll-off traffic at Khalifa Port jumped by 31% to 33,687 vehicles, up from 25,709 vehicles during the same period last year, according to Abu Dhabi Ports, the master developer and manager of Kizad. General and bulk cargo rose by 13% to touch 3.98 million tonnes compared to 3.5 million tonnes during the first quarter of last year. The Khalifa Port Container Terminal, which is operated by the Abu Dhabi Port subsidiary Abu Dhabi Terminals, reported handling 5% more containers during the first 3 months compared with the same period last year, with the terminal recording 316,996 20-foot equivalent units, up from 302,151 units. Danube Properties has today announced the launch of the 300 million dirham Glamz Residence development in Furjan Area of Dubai, making it their 6th project in the affordable housing segment and taking their overall project portfolio value at 1.8 billion dirhams. Unveiling the new residential project at a press conference today, company officials stated that their objective is to encourage more and more UAE and Dubai residents to stop renting and start owning, and they are hopeful that the launch of Glamz Residence will further strengthen Dubai's affordable housing segment. With studio apartments starting at 450,000 dirhams, officials stated that all their units will feature innovative furniture solutions, allowing owners to convert part of their living room to a bedroom. Confident that the project will be delivered in record time, Danube officials also highlighted that their cost-effective payment plans will enable property owners to enjoy their fully furnished apartments, making them truly affordable. The project, which is slated to be completed by September 2018, will feature 418 fully furnished apartments, including 268 design studio, 121 one-bedroom and 32 two-bedroom apartments, while also allocating space for 8 retail shops to meet the daily needs of property owners. It was mentioned that the development will also include landscape gardens, kids' play area and state-of-the-art health club, among other facilities. Set in 560 acres around Ibn Battuta Mall, Glamz Residence in Al Furjan will be in close proximity to Al Maktoum International Airport and Dubai Expo 2020 site.
Today, if you look at it, if you are having a Discovery Garden apartment, today is costing 55,000 dirhams a rental, whereas you can buy this property for less than 500,000 dirhams and you pay 4,000 to 5,000 dirhams per month, which is very, very less for the rental. And instead of paying rent, this property can be yours in 8 to 10 years' time. So why would you pay rent? And a lot of people are thinking on that terms and trying to buy that property. Like 80 to 90% of my buyers have been people who have been buying on rent, staying on rent. They want to invest in this. Furjan, if you really look at it, it's close to the other community like Jabal Ali, Media City, DIP. This is the other one is Dubai Investment Park, and a lot of other places which people will be interested to take that property. The whole idea is to convert people into, instead of renting, start owning. Where people, rather than paying rent, because I was also paying rent earlier and I now moved to my own apartments, I'm very happy about it, and that's the whole idea.
Dubai Multi-Commodities Centre has revealed that it attracted its 12,000th member last month. The number of companies registering to trade within the free zone based in Jumeirah Lakes Towers increased by 18% last year from 2014 to more than 11,500 according to the DMCC's annual report, which was published on Monday. The growth equates to an average of 7 new companies registering with DMCC each working day, making it the largest and fastest growing free zone in the UAE. By comparison, more than 1,445 companies operate from the Dubai International Financial Centre, and more than 7,100 manufacturers, logistics companies and trading groups are based in the Jebel Ali Free Zone. The Free Zone was set up in 2002 to enable Dubai to become a trading hub in commodities, precious metals and gems, and new encompasses 66 towers, 5 hotels, 92 schools and colleges, and more than 500 shops in its 200-hectare JLT base.